Hello, it's Jim for the Monopoly Project. We're here on the Monopoly Project yacht on Val Vista Lakes. Every successful real estate investor has a yacht, and this is the Monopoly Project yacht. Unfortunately, it's the McKinney Girls' Day off, so you just have me. But we're on Val Vista Lakes here on a beautiful Monday afternoon, the 31st, and we're here to review 3 books. And so we have one book on naval fiction, one book on commercial real estate, and then the third book is on the disciples and whether what happened with Jesus was really true or not. Hello, this is Jim. I'm back for the Monopoly Project. Our floating book reviews on the 31st of January 2022. We're on Val Vista Lakes. As I said earlier, we're floating down towards the bridge on a Monday afternoon. Our next book, I don't have a copy of it, but you can see a picture of it here. And it's a Kindle book is why I don't have a copy of it. I was looking for a shorter intro to commercial real estate. I'd strongly recommended the Encyclopedia of Commercial Real Estate on our last book review, and I'd sent it to a friend who asked about commercial real estate. He's doing residential and Airbnb, and he wants to transition over. And so I was looking for something a little shorter because the encyclopedia is like over 600 pages. And so when I was searching for that, I came across this book by Michael Stephen called Commercial Real Estate: Journey Towards Financial Freedom. It's 140 pages. I got the Kindle version for 98 cents, so that was definitely worth looking at. It also came highly recommended on the Amazon recommendations. The book was written in 2020, and I got to say I was disappointed in the book. I do not recommend it. And I'll tell you why here in a minute. I usually don't review books that I don't recommend because it's just a waste of your time and a waste of my time. But I did. The reason why I don't recommend this book and I'm making a point of talking about it is because when I started reading it, it mostly read pretty much like the standard commercial real estate introduction. You know, you can make a lot of money and blah, 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 you know, all true things. But then I started reading sentences and statements that struck me as not just opinion or controversial, but flat out wrong. And so I started taking notes. You can see right here, I got some notes, and I'll put that in the on the blog on the review page. But let me just give you some examples. And the first, and I started taking page numbers off the Kindle, but the first one on page 28, it says, naturally when cap rates go up, the return on your investment goes down. And I think that is absolutely backwards. You want a high cap rate. I mean, a cap rate is the return the property makes after all expenses, assuming there's no loan on it. It's just bought for cash. Equivalently, an easier way for us to think about it is it's a savings account where you put, you know, so many dollars into it and you get so much interest rate. The cap rate is the interest rate. And so you want a high cap rate. You want, you know, if you want a 10 or 12% return as opposed to a 3 or 4% return. Now, I understand if the point he's making is that if you buy something at a low cap rate and cap rates go up, then the value of the investment does go down because it's inversely related to the return on the property. But that just struck me. And then the next one, I didn't take the page number, but it says, you won't lose your personal property if you experience a loss if you set up your business as an LLC. Again, you won't lose your personal property if you experience a loss if you set up your business as an LLC. And I think that's in general true, that LLC provides legal protection. It doesn't put your other assets at risk. And so I think he's saying that, but in the context he made it, it was sort of confusing. And then the next one, this one, the chances of making a higher revenue are almost double that of residential investments. And I think he's obviously talking about commercial property as opposed to residential, even though residential is commercial also, at least multifamily. But again, that strikes me as just absolutely wrong. I don't understand how you can make double on one investment. If that was true, then you know, everybody would go into that investment until the returns equalize. That's just standard. standard, basic economics, right? And so, that was another statement that just struck me as, at the best, misleading, and more accurately, totally wrong. I'm looking up here because there's a big goose or swan or something in the lake, so I'll head towards them and try and spin the camera so you can see him. So that's one. Okay, now on page 56, it says you found a great property for a potential tenant. Oh, there he goes. Okay, you found a great property for a potential tenant. In fact, your building could be perfect, matching exactly what your client is looking for to open a bakery. And I guess now he's operating as an agent, or he's buying property for a potential tenant. But he goes on, the price is right too, and you can come up with the entire down payment yourself, giving you an edge by being able to charge an acquisition fee at closing. The rent you'll be able to get will be enough to cover your operating expenses and tuck a nice little something away for your next purchase, which now looks more likely to be sooner than you anticipated. And so again, it's a bunch of statements that it isn't real precise in what he's saying. And charging an acquisition fee at closing, who are you charging? Are you charging the tenant? I mean, you're already going to lease him the property, so again, it just doesn't make a lot of sense. And when I started writing these down, was what I read on page 71 was, and this is what he says on page 71. According to Commercial Tenancy Act, tenants have the right to request a tenancy period extension for up to 5 years. It is up to the investor to continue with regard to extending the lease or not. And so I've never heard of the Commercial Tenancy Act. And so I looked it up, and it's actually a Canadian law. That's in effect in some of the provinces. And I guess it says that, but it certainly does not apply to the United States market. There's no, I mean, everybody has a right to request an extension, and a lot of times they have the option to do it. But again, it's just not applicable to the United States markets. He goes on page 71 to say there are also tax benefits which can be taken advantage of, making your ownership of commercial real estate with the business protection of LLC very desirable and advantageous in most business situations. An LLC holding vehicle is very popular for business, but many compare the formalities of such venture troublesome. And I'm not sure what all that means. He goes on page 93 to talking about the same thing about it. About LLCs and legal entities. And he says, due to the fact there's no separate LLC tax classification, the owner can avoid double taxation on rental income and the appreciation of the property when selling it. If you are a single owner, the LLC enables you to deduct mortgage interest just like a sole proprietor can, based on current IRS outlines and conditions. And again, there's so many statements, parts of that statement that just that are wrong or won't make sense. You don't have double taxation unless you're operating as a C corporation. All the others are passed through, and you can deduct mortgage interest no matter what type of legal entity you're operating, whether it's a sole proprietorship or, and in that matter, even a C corporation, whether it's a LLC tax as a C corporation or a pure C corporation, can deduct expenses, and mortgage interest is a legitimate deduction. So anyway, like I said, and not like, again, on page 120 says, since 2018, a 20% deduction on income is allowed if it is received as a pass-through entity, such as with your LLC business profile. I don't know if that's a Canadian thing or what, but it's absolutely not true. I don't know of any 20% deduction on income if it's a pass-through entity. If it's a pass-through entity, it just means you don't file a separate tax return, you file it on Schedule C or E or D of your tax return. So in the United States, so again, it's just flat out wrong. One of the few criticisms, I said that this book came highly recommended by the Amazon And it did, and I'm thinking a lot of them might have been just written by friends or family, because they're also uniformly glowing. But there was one in there that said, even though this book is written in 2020, there's virtually no discussion of COVID and its impact and its disparate impact on the various different types of commercial real estate. And they're correct, but in his final words on page 130, you can see right down here, he does have another book or another discussion of the COVID impact. So he does discuss that elsewhere. He's got a lot of other books. And so, again, I just can't recommend this because it's got this misinformation, and it doesn't really serve as a good introduction. And finally, another one which he talks about, which is absolutely false, at least where we live. Page 18, regulation restrictions are stricter in commercial real estate than in residential. Well, that's absolutely not true. It's just the opposite. Residential real estate is probably the most regulated economic activity after employment, hiring and firing people. And there's a lot of rules about what you can and can't put in a lease and what you can and can't do. I mean, the simplest example, if somebody is in violation of a residential lease, you have to give them notice, and usually, not usually, at least in Arizona and all the states I've ever operated in, you have to give notice, and to actually kick them out, you have to go get a court order, which is enforceable by the constable. You can't literally kick them out yourself, even if you have the court order. You have to have an officer of the court, the constable. And there's a lot of rules and regulations of what you can and can't do in residential real estate, whether you're operating as a mom and pop one-person show or whether you're a multi-family, 10,000 units. You got to follow all these rules. Whereas in commercial real estate, it's purely a contract between two business entities, and you can literally, if you feel they're in violation of the lease, of the contract, you can literally go lock the doors on them, lock them out of their business. They can sue you for violation of the lease, but if they are in violation, they're going to lose. So at least where we come from, regulations are extremely there are much fewer regulations on commercial real estate than there are in residential real estate. So again, I'm sorry, Michael Stevens, but I can't recommend this book. And so this is Jim for the Monopoly Project. We're going to head back. We're going to do one more book review on the way back, and then we will dock at the mansion of the Monopoly Project. Again, this is Jim signing off. Thank you.